Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and thank you for joining us today. A webinar on Vivad Se Vishwas Scheme, what taxpayers should do. In this session, we will discuss key areas of the above said scheme. Joining the webinar today, our speaker is Neeraj Sharma, Senior Executive Director, Direct Tax and Regulatory from Nexdigm. Before we begin, kindly note that all our listeners are in listen-only mode. If you have any questions, please share them with us through the question box on the right-hand side of your screen, and we will address your queries at the end of the webinar. We are happy to host today's webinar for all our listeners. Without any further delay, we shall start the session. Over to you, Neeraj.
Thank you, Jugal. Thank you very much. And good evening, everyone. Welcome to this webinar on Vivad Se Vishwas Scheme 2020. Well, we did the first session on Vivad Se Vishwas Scheme about a month ago. That was immediately after the scheme was floated by the finance minister. And we are doing this session now after about a month and a half. A lot of water has flown under the bridge between this time. I'm not talking about COVID, I'm saying in terms of development of a scheme. But yes, talking about COVID, we are definitely passing through very difficult times, unprecedented times. Most of us are working from home and still trying to work, trying to do whatever can be done right now. Well, coming to the topic Vivad Se Vishwas Scheme, background in which the scheme was floated is that there are about 483,000 appeals which are pending across different levels, right from Commissioner Income Tax Appeals to Supreme Court. The total funds that are logged in these appeals are approximately 9.32 trillion, and which is approximately 82% of tax collection which happened in financial year 18-19. That's a lot of money. Objectives are definitely clear that the government wanted to definitely reduce the pendency of appeals. It also wanted to release the funds logged into the appeals. At the same time, the litigation in our country is a long drawn process. It takes about 7 to 10 years before the matter settles down. And therefore, there was an intention of reducing the time involvement, resource involvement, both at the taxpayers and tax departments end. And therefore, this scheme was floated to unlock those funds, to reduce litigation, to save time. Now, as I said, the first webinar we did immediately after 5th of February when the scheme was introduced, and a lot of developments have taken place. We will quickly talk about what has happened over the last 1.5 months, or maybe 2 months. On February 1, the announcement was made in the union budget by the finance minister, and the government is moving really fast. In 5 days' time, the bill was introduced in Lok Sabha. On February 12, amendments were approved by the union cabinet. On 14th, the amendments were moved in Lok Sabha. On 17th of March, President on March 4th, the bill was approved by Lok Sabha. These developments took place, and on March 5th, the government very proactively came up with the first set of frequently asked questions which clarified certain issues that were emanating from the scheme. On 13th of March, Rajya Sabha approves the scheme, and on March 17, President finally gave the assent. It becomes the act. On March 18, the government again very proactively came up with the rules and forms. On March 24, today, just a couple of hours ago, or less than a couple of hours ago at 2:30, our finance minister held a press conference, and she has extended the deadline of 31st March to 30th June. What is the significance of this extension? We'll talk about when we go into the scheme. The end date of the scheme, as per the original thing, was 30th June. We are not sure whether that will also be extended because the power has been delegated to the government. If the government feels that it needs to be extended, they will. And after the first frequently asked question circular, the government is also likely to issue a second set of frequently asked questions clarifying certain other questions that are emanating after the amendments were introduced in the scheme. Well, if we talk about mechanism under the scheme, it's a four-step process, and it starts from filing of a declaration. This, of course, is electronic filing. Once the declaration is filed within 15 days, the tax authorities will issue a certificate saying that how much amount is payable under the scheme in a particular appeal. Within 15 days of receipt of that certificate, the taxpayer is required to file another declaration after paying the tax and after withdrawing the appeals in the applicable cases, and make an intimation to the tax authorities. And as a final step, the tax authorities will pass an order. They will issue a certificate that the tax has been paid under the scheme and the matter is over once and for all. The key highlights of the scheme are that appeals that are pending before Commissioner Income Tax Appeals or ITAT, that they will be deemed to have been withdrawn once the certificate is issued by the tax authorities and so much amount is payable. In the case of other appeals which are not before Commissioner Income Tax Appeals or Income Tax Appellate Tribunal, like the writs or any appeals which are pending before High Court or Supreme Court, or any arbitration or other matters or conciliation proceedings, after the certificate issued by the tax authorities, in those cases, the taxpayer will be required to withdraw those appeals and file a declaration with the designated authority saying that the appeal has been withdrawn. Post that, the authorities, as I mentioned, will be issuing a final certificate. At the same time, if somebody is wanting to avail the scheme, he is required to waive his rights of seeking or pursuing any other remedy in relation to the tax matters which are being settled under the scheme. One more important thing is that order which is passed by the designated authority under the scheme is final. It cannot be challenged in any appeal in any court of law. Another thing is that immunity is being granted from prosecution. The cases which are being settled under the scheme, there is a complete immunity from prosecution. The authorities will not be initiating any prosecution proceedings. Last and but not the least, any amount that is paid under the scheme is not refundable under any circumstances. Let's talk about the cases that are covered under the scheme. Right now, we are talking about the cases which are covered under the scheme as per the act which was approved by the both houses of the parliament, and President has given assent on 17th of March. It covers also the cases which were covered under the amendment or revised scheme. So all the cases which are pending before Commissioner Income Tax Appeals, Income Tax Appellate Tribunal, High Court and Supreme Court, all the appeals, any writ petitions or especially petitions that are pending before High Court or Supreme Court, any objections that have been filed before the DRP. There can be various stages in case of objections before DRP, that objections have been filed and thereafter the DRP has passed the final order but has given the directions, but the assessing officer is yet to finalize the final order. All those stages are covered. For arbitration and conciliation matters also, the scheme is open. Any revision applications that have been filed under section 264 before Commissioner, those applications have also been included in the scheme. Then orders passed by the assessing officer, lower appellate authorities on or before the specified date, and the time limit to file the appeal is yet to expire, because in this scheme the magical date is 31st January. Any appeals that are pending on 31st January are covered under the scheme. But there could be certain situations where the orders were passed, let's say on 29th of January, and the timeline to file the appeal is yet to expire. In those cases, there was a representation from the taxpayer side that such cases should also be included in the scheme. So those cases will also be included. In the case of search and seizure cases, initially the search and seizure cases were not included, but now any search and seizure cases where the tax impact is less than 5 crore, up to 5 crore in a particular financial year will also get covered. There was another wish list from the taxpayer side that any appeals which are pending before Commissioner Appeals, and Commissioner Appeals has issued an enhancement notice, in those cases also the scheme should be applicable. So this has also been approved by the government. Government has said that any cases where enhancement notice has been issued by the Commissioner of Appeals, those cases will also be covered under the scheme. Now, there are certain things, certain types of cases which are not covered under the scheme. The first of these are the search and seizure proceedings where the tax impact in a particular financial year is more than 5 crores. So there could be a situation that there is a search case and there are 6 years involved plus the year of search 7 years. If the cases in which the tax impact is up to 5, those cases will be covered. Other cases cannot be opted for the scheme. The cases in which prosecution under the income tax has been launched before filing of declaration, those cases will also not be eligible. Similarly, in cases where undisclosed income from outside India cases has been assessed by the tax authorities, those cases will also be ineligible. Similarly, the cases in which exchange of information has been the basis of making additions in the assessments, those cases will also be excluded. Similarly, the cases where conservation of foreign exchange and prevention of smuggling act is applicable and some person has been detained before filing of declaration, those cases will also be excluded. Similarly, any person who has been convicted or where prosecutions have been initiated by tax authorities under IPC or Special Courts Act, those cases are also not covered. Important here is to note that this scheme is applicable only to the income tax litigation, income tax cases, the wealth tax, the equalization levy, securities transaction tax, commodities transaction tax. Such cases are not eligible to go in for the scheme. Interest waiver applications, although there was a wish list from the taxpayer side that the interest waiver application should also be covered under the scheme, but the government has not included them. Reopening of cases under Section 147 on a new issue, even if other years of the assessment year settled under the scheme, these cases are also not covered. The basic intention of covering the cases under the scheme is that where the amount is quantifiable, just because a notice has been issued under Section 147, although that issue is covered in the subsequent years, such cases will also not be eligible, because at the stage of issuing of notice under Section 148 or assessment under Section 147, there is no quantifiable demand, and therefore such cases have been kept outside the scope of scheme. What is the effect and in what circumstances the declaration filed by the taxpayer will be considered as void declaration? First of such situation is that declaration is found false at any stage. There are some misstatements, deliberate misstatements by the taxpayer. Second is the taxpayer violates any condition under the scheme, that is Vivad Se Vishwas Scheme. Those cases the declaration will be treated as void, and the declarant acts in a manner contrary to undertaking furnished by him. In those cases, the declaration filed by the taxpayer will be treated as void, and the consequences will be that all the proceedings that were taking place under the Income Tax Act before filing of declaration, before opting for the Vivad Se Vishwas Scheme, they will get revived and all the consequences will follow. Coming to how much amount is payable if one opts for settling the dispute under the scheme, well, there were two different slabs of payment of tax. One was that if you make a payment by 31st March, you were liable to pay a certain amount. If you pay the amount beyond 31st March but before 30th June, those cases will have to pay an additional 10%. Recently, as I mentioned just a couple of hours ago, our finance minister did a press conference and she has announced that in view of the fact that the entire country or the whole of the globe is struggling with COVID-19, the deadline of 31st March has been extended to 30th June. The net effect of this is that there is no additional payment of 10%. One, if somebody wants to opt for the scheme, he can file declaration. If the payment is made by 30th June, then he will have to pay only tax amount. There is no additional 10% payment. Now, coming to three different types of payment that are involved in these cases. First is where litigation is about the substantive part of it, there is an assessment, and then there is interest, and there are penalty consequences on that. If that assessment is settled under Vivad Se Vishwas Scheme, the taxpayer will have to pay only 100% of the tax amount. The interest, the penalty, and any other things will not be there. They will be waived. In case the litigation is only about interest or penalty, in those cases, the taxpayer will have to pay 25% of the tax. In case the litigation is about the tax and interest and penalty, in such cases, in those cases, 125% of the tax amount has to be paid. Interest and penalty will also be waived in those cases. There is another interesting thing in the scheme that there could be disputes from the tax department side that the appeal has been won by the taxpayer and the department is in appeal. In those cases, if the taxpayer wants to settle those disputes, in those cases, he will have to pay 50% of the amounts that have been mentioned above. Like if it is a substantive appeal, there is a tax demand, interest and penalty. In those cases, he will have to pay only 50% of the tax. If the dispute is about interest, penalty or fee, he will have to pay 12.5%. And in such cases, he will have to pay 62.5% of the tax amount. The other thing is in cases where a particular issue has been covered in favor of the taxpayer by the next appellate authority. For example, the appeal which is supposed to be settled in the Vivad Se Vishwas Scheme. In that case, there is a certain issue, and that particular issue in a previous or subsequent year is covered by the order of Income Tax Appellate Tribunal or a higher authority. In that case, the taxpayer will be liable to pay only 50% of the above amounts. He will not be liable to pay 100%. So that is a very big benefit that has been given under the scheme, that the taxpayer, one, he can settle the disputes which are at the behest of the department, and two, the cost of settling those disputes is just 50% of what he ought to have paid had the dispute been at the behest of the taxpayer only. What is the quantification of disputed tax? The first one is about appeal is pending, let's say in a writ or essay. In those cases, the disputed tax will be computed considering that the order of the lower authority, the authority below that, is to be upheld. Supposing there is a SLP pending in Supreme Court, the High Court order is against the taxpayer. So in that case, if that SLP is to be settled under the scheme, in that case, the taxpayer, the amount of disputed tax will be done basis that High Court order is to be upheld. In appeals or writ petitions where appeal is yet to be filed, then in those cases, it will be considered that this amount is as per the appellate or writ order. If the assessing officer has passed an order and the appeal is yet to be filed against that, then whatever is the amount computed by the assessing officer under the assessment order will be the disputed tax. Similarly, in the matters which are pending for DRP directions, then amount as per the draft assessment order. Where the final assessment order is yet to be passed, but DRP has passed its direction, in those cases, the amount to be computed as per the DRP directions. In cases where 264 application is pending before Commissioner, in those cases, it will be computed assuming that the 264 application is rejected by the Commissioner. Similarly, where the enhancement is proposed by Commissioner in Income Tax Appeals, in those cases, the disputed amount will be computed considering that the enhancement is upheld. Now, there are certain situations where a taxpayer has filed a return and there is a loss or there is a MAT credit available to him. In those cases, the taxpayer has two options. The first option is that he pays the tax as per the scheme. Whatever is the disputed tax on this disputed tax, a disputed amount, he pays the tax on that. The other option is that he does not pay any tax, but he carries forward the reduced MAT credit or reduced loss or reduced depreciation. This is a very good thing, and this is very beneficial to the taxpayers, because generally what happens, the old disputes which are there, let's say there is a dispute for the assessment year 2005, 2006, and a taxpayer had filed a return claiming a certain loss, let's say 1 crore rupees. There were certain additions by the tax department, and those additions are reducing the loss from 1 crore to 50 lakh rupees. And because the taxpayer has been filing his return for the subsequent years, there is a possibility he has already offset this 1 crore loss in the subsequent years. And if the assessment for this year is disturbed, then obviously in the subsequent years also there will be a problem. So this option is very beneficial to the taxpayer in managing his affairs for the subsequent years in a way in which he wants. He can either choose to pay the tax in this year and carry forward the entire loss or depreciation or MAT credit in the subsequent years, or he will, if he doesn't want to pay the tax under the scheme in the year under litigation, then he can carry forward the reduced MAT credit, loss or depreciation. Well, in case this option under second option is exercised, wherein the taxpayer chooses to carry forward the reduced loss or unabsorbed depreciation of MAT credit in the subsequent years, in that case, the WDV of the block of asset is not to be adjusted, and unabsorbed depreciation, the reduced amount, will have to be carried. Second important thing here is that amount by which the reduced loss, unabsorbed depreciation or MAT credit to be carried forward, it will be computed as under. In the normal cases, 50% if the issue is in favor of the taxpayer. In other cases, it will be 100%. In eligible search cases, it will be 62.5% if the case is in favor of the taxpayer, and 125% if it is not in favor of the taxpayer, it is against him. The government has, as I said, has very proactively notified the forms also on 18th of March. And there are basically 5 forms that are involved in the entire process from beginning to end. The first form is about the declaration, where the taxpayer files a declaration. Form 2 is like the way the taxpayer verifies his return. So Form 2 is for filing an undertaking. Then once Form 1 and Form 2 are filed, the designated authority has to issue a certificate determining the amount payable. That will be in Form 3. Form 4 will be where the taxpayer, after making the payment of taxes and withdrawing the appeal, will intimate the tax authorities. And Form 5 is the final form where the tax authorities, the designated authority, will issue a certificate saying the tax has been paid under the scheme. So these 5 forms are there. It is a complete electronic filing, the way we are filing the tax returns, the way we are filing the appeals. Same way the Form 1 to 5 have to be filed. The other thing is the verification and signing of these forms has to be done similarly, exactly the way we are filing the return. If a taxpayer, let's say, is a company and he is required to file the return with DSC, then the Form 1 or Form 2 or Form 4, they will have to be filed using the DSC. If it is an individual taxpayer and he has an option to file his tax return using either the DSC or the second option is electronic verification, then he can choose either of the two. Right now, only 2 forms are active on the Government of India Income Tax Department website. This is Form 1 and 2. Form 3 is yet to be activated. Similarly, Form 4, 4, 5 are also to be activated. The filing has to be done by logging into the portal and going to Vivad Se Vishwas tab. And as I said, you can either use a DSC, EVC, depending on your qualification of using either of them. Well, Form 1, one important thing is Schedule D. In this particular form, the taxpayer has been asked to furnish certain critical details. These details are brought forward, as you can see on the screen. There are 5 details that need to be furnished by him under Part D. The first one is brought forward as claimed by the SSE, carried forward as claimed by the SSE, disputed income, brought forward as per income tax authorities and carry forward as per the income tax authorities. I believe the difference between A and D would be equal to C. Similarly, difference between B and E will be equal to C. This is more important in the case of the taxpayers who want to carry forward the reduced loss or unabsorbed depreciation or MAT credit, where they don't want to pay the tax in the year under litigation, which is being settled under the scheme. The frequently asked questions that were issued by the government, there are certain important things which require our attention. The first one is that advance ruling authority cases are not eligible for opting for the scheme. However, there is an exception, and that exception is where the advance ruling authority order quantifies the income of a taxpayer. That means the amount is quantifiable. In those cases, the taxpayer may choose to go in for the scheme. In other cases, he cannot. Similarly, if there is a notice under section 148 and that has been challenged by the taxpayer in High Court in writ petition, because merely issue of notice does not determine or quantify the amount that he will be liable to pay if the assessment happens in a certain way. Therefore, such cases have been kept out of the ambit of the scheme. Similarly, any orders that have been passed under section 263, wherein only 263 has been passed and the assessing officer is yet to pass the final order, which will be challengeable by the taxpayer, such cases are also not eligible. The notice for initiation of proceedings has been issued, but the prosecution as such has not been launched. In those cases, subject to the fact that taxpayer chooses to go in for compounding against those notices, and he can opt for the scheme in those cases. Similarly, there is supposing a quantum appeal and there is also a penalty appeal, both are pending. In such cases, it has been clarified by the government that you can settle either the quantum appeal or you can settle both the appeals. It is not an option available to the taxpayer that he settles only the penalty appeal, because penalty appeal in isolation cannot be settled. Either you settle both quantum as well as penalty, or you settle only the quantum appeal. Another important thing is the computation of disputed tax has to be done issue wise. It does not have to be done at the global level. You have to go issue wise. What are the issues? There could be 5 different issues in a particular appeal. So you have to compute the tax, disputed tax, issue wise. Now, cherry picking is also not permissible under this scheme. Cherry picking in the sense that supposing there are 5 issues, taxpayer cannot opt to settle 2 issues and leave the other 3, or any combination of that. Either the whole appeal has to be settled under the scheme or it will not be settled. The government has also clarified that any taxes that have been paid previously in terms of advance tax or a TDS or subsequent taxes on regular assessment, the credit will be available. If in a particular case there are 5 issues and one of the issues is ineligible, then entire appeal will become ineligible. It is not the case that we leave out that particular issue and settle the other issues. If one single issue, supposing there is a appeal pending before the before a particular authority, in that case, what will happen is that supposing there is an undisclosed income from the sources outside India, that is one of the issues, and other issues are regarding disallowances of the normal expenses. In that case, the entire appeal will become ineligible because there is an issue which is ineligible. The cases which are pending before High Court or Supreme Court, the process that is followed by High Court and Supreme Court before they hear the matter, they first admit the appeal, that is the stage 1. In stage 2, once the matter is admitted, the final hearing is done. The government has given the benefit that if you have filed an appeal, although it has not been admitted by the High Court, it will still be eligible for going in for the scheme. Some other points which the taxpayers were struggling and they have been clarified under the FAQ circular issued by the government is regarding, supposing there is a particular case where the TDS TDS was not deducted by the taxpayer deductor. And it has obviously consequences in the deductee also. Supposing the deductor settles the dispute by paying the taxes in some other manner, would the credit will be available to the payee or not? That was a question mark. So it has been clarified that in such cases, if the deductor settles the dispute, in those cases, the credit will be eligible to the deductee. Similarly, because if a taxpayer forgets or misses to deduct the TDS, then there are other consequences in addition to consequences under section 2011A. The expenses on which the TDS has not been deducted are not eligible for deduction, either fully or partly, depending on the year to which they pertain. So it has been clarified that if the appeal in respect of the TDS non-withholding has been settled under the scheme, the expenses will also be allowed to the taxpayer. There are also cases of protective and substantive additions. For example, in the case of AOPs, Association of Persons, which generally happens, the assessment is made on the AOP as well as on the partners of AOP. In those cases, the officer chooses to make one of the substantive assessment. Let's say he makes a substantive assessment on the AOP, and he also makes a protective assessment on the partner of the AOP. Now, if somebody settles the substantive addition, the protective assessment will automatically fall, but vice versa is not permissible. Nobody can settle the protective assessment, and as a consequence, substantive assessment would also fall down. No, that is not permissible. You have to settle the substantive assessment to ensure that the protective assessment also goes off. Now, settlement only of the issues forming part of the appeal. There is a possibility that in certain cases, supposing there were 5 different additions made by the tax officer, and the taxpayer has chosen to appeal only 2 of those issues in appeal before the Commissioner appeals, the other 3 have been left out. So in those cases, the settlement will be only of the issues which are part of the appeal. The other issues which have been left, they will be considered normally. In those cases, the consequences of interest, penalty, and other things will automatically follow the way they ought to have followed under the normal circumstances. No appeal against the order passed in the scheme. This is very clear. This has been re-emphasized by the government. Any dispute that is settled under the scheme, it has been clarified by the government very vehemently that it will not be considered as conceding on that particular issue. Supposing as a taxpayer, somebody has got appeals for 5 different years pending, and he chooses to settle one of the various appeals on the same issue, then the subsequent years will not be open to the department to argue that the taxpayer has conceded on this issue in this scheme and therefore they should be decided against them. This is not an argument available to the department. In transfer pricing cases also, the primary adjustment, if it is settled, then secondary adjustment will have to be settled separately if it is made. It is not an automatic process. Benefit of the scheme is only on payment of disputed tax amount payable. If somebody files a declaration and it does not pay the tax by the timeline that has been notified, then he will not be eligible for the scheme. The dispute will remain open. It is only the precondition is that the tax is paid. Now, even though the government has clarified all these issues, yet there are certain areas which are still open, because there were some revised things that were introduced in the scheme after receiving the responses from stakeholders, and now they remain still open, that need to be still clarified, and we are hoping that they will be soon clarified by the government. The first one is that section 9 of the Act. When I'm saying Act, means the Vivad Se Vishwas Scheme Act. It talks about prosecution in respect of assessment year and taxpayers. The question 22 is relevant in this case. So in this situation, the point is that if in a particular year a prosecution has been launched against a taxpayer, whether the taxpayer becomes ineligible for the scheme or that particular year remains ineligible for the scheme, this needs to be clarified by the government. Our understanding is that it is applicable to a particular assessment year. It should not be applicable to a taxpayer. Only that particular year in which prosecution has been launched will have to be settled. The status of appeal as on 31st January 2020 has to be seen. And there are certain situations that appellate orders are received subsequent to filing of after 31st of January 2020. What will happen in those cases? For example, the hearing had taken place, everything had happened, but on January 31st, there was no order. And the order is passed or received by the taxpayer subsequently, whether such cases will also be eligible for the scheme or not. Another type of cases are where the entire order is, entire assessment is set aside, let's say by a tribunal in a particular case, and tribunal sends the matter back to the assessing officer for de novo assessment. The wish list is such cases should also be covered under the scheme. And if the taxpayer is agreeable to pay the tax on the amount that was disputed before the tribunal, then such cases should also be covered. Certain applications, rectification applications are pending on the designated date, which is 31st January 2020. But there is a possibility, because these are normal rectification applications where taxpayer has filed an application, let's say after 31st of January, then the rectification applications as on 31st, as on filing of declaration have to be considered, not only the ones that were pending on 31st of January. Adjustment of refund due under the income tax statute against an amount payable under the scheme 1 year and against the other year. There could be situations where the tax is payable in particular year in which is sought to be settled under the scheme, and there is a refund available to the SSE in a different assessment years. So it is the intention or the wish of the taxpayers that these 2 years should be available for offset. The taxpayer should not be asked to pay the tax all over again and ask for the refund in the other year. If there is a demand and there is a refund, then they should be available for offset. It is not very clear from the scheme, the way it exists as of today, that what will happen in the subsequent year where there is a consequential impact. So there could be a situation that in a particular year there was an addition, and because of that addition I am eligible for lesser depreciation or my business loss reduces, whereas I have already offset this loss in the subsequent years. I settle this year's dispute by not paying the taxes but carrying forward the lesser depreciation allowance or lesser loss. Then what will happen in the subsequent years? That process has not been clarified. Obviously, if I'm choosing not to pay tax in this year but carry forward reduced losses, then I will be eligible to claim the lesser losses in subsequent years. But the process in which they will be offset, that is not defined. Challan in which the taxes will be paid, that challan is yet not notified. What particulars, how it will be paid, whether it will be paid as a regular assessment tax or something else, that is yet to be clarified. There are certain clarifications needed on specifically on question number 30 of frequently asked questions circular. That supposing the deductor settles the dispute in a particular appeal, how will the deductee be eligible to claim that as credit? Because as on the date of declaration, that amount is not appearing in Form 26A of the. And what is going to be the mechanism? How will 234B interest be computed? These things still require a clarification. Similarly, question number 31, which talks about that the deductor will also be eligible to the expenses if he settles his appeal for non-deduction of tax, then the mechanism has not been defined. Let us say there is an appeal for the assessment year 2005-2006, and the taxpayer had failed to deduct tax. In addition to the TDS proceedings, the the expenses relating to non-deduction were also disallowed in that particular year, and both the appeals are pending. Then what is going to be the mechanism for settling that? That is yet to be clarified. One more thing which is very important, supposing the taxpayer wants to opt for the scheme, for certain reasons he is not eligible to avail the scheme. Maybe he fails to pay the tax, or there are some other reasons for which the scheme is not availed by him. In those cases, what will happen to the appeal that have been deemed to have been withdrawn by filing of declaration and other things? There should be some process in place where the taxpayer, if he is not being able to avail the scheme, then he can pursue those appeals in the normal course. And last but not the least, the orders that are passed by the authorities for determining the amount of tax payable in Form 3 or in Form 5, if there is a mistake, let's say a mistake apparent from record, those kind of mistakes should be rectifiable. That has not been clarified, that needs some elucidation and the process in which they should be dealt with. This is a screenshot of Part E of Form 1, which wherein the taxpayer is required to fill in the details or information related to payment against tax arrears. This does not capture, this only talks about the BSR code, date of payment, as you can see on the screen, serial number of challan. There is no space for filling in the details of the TDS that has been paid by the taxpayer. There could be a situation that there is a particular matter which is an appeal, and that matter has been decided in favor of the taxpayer, let's say by the tribunal, and department is in high court. Now taxpayer wants to settle that dispute, and assuming the entire tax on that particular appeal has already been paid by way of TDS, in such cases there is no possibility of the taxpayer filing details of the TDS that has been already paid, because in this particular situation that I talked about, he will be eligible for refund of 50%, because the appeal has been decided in his favor and the department is in appeal in high court. Assuming 100 rupees tax was payable, he is eligible to a refund of 50 rupees. How will that be worked out? It is not clear from this particular form as it exists today. Another important thing which is coming out of this Form 1 is in Part B. As you can see, the pop-up in column number 5, there are different sections that have been mentioned, like 143.3, 144, 147, and so on. There is no mention of any intimation in the section 1. There are situations where a taxpayer appeals against an intimation also. It does not necessarily file a 154 application, he may choose to go in appeal. Similarly, the orders under section, intimations under section 200 capital A, those are also not finding a place in this. So this form, I'm sure, will have to be revamped, or the government will come up with some clarification that how the details are to be filled in such cases. A big expectation is that the taxpayer should be given an opportunity of being heard before the amount payable has to be is determined by the designated authority. Because there is always a possibility of some mistakes creeping in and then going into rectification or other things. Even the rectification process is not there. So it would be all the more worthwhile that there is an interaction which is available between the taxpayer and tax authorities for handling these situations. The cases where revenue has already issued a circular and he has already accepted a particular judicial precedent, in such cases also where such a particular position has been accepted by the department, in such cases also it must be clarified by the government. Lastly, the applications which are pending for rectification or any compounding applications that are pending before the tax authorities, these applications require a speedy disposal, because if supposing there is a demand of a certain amount and it is because of particular mistake apparent from record for which taxpayer has filed a 154 application, unless that 154 application is disposed of by the authority, it will be burdensome on the taxpayer to pay the higher amount, although he is liable to pay a lesser amount. And any condonation of appeals that have been filed by the revenue authorities, there should be a mechanism. Supposing there is an appeal, then order has been passed by Commissioner Income Tax Appeals on a certain date, let's say on 30th of January 2020. The timeline to file appeal in the tribunal will expire after 2 months and the department has yet not filed the appeal. Or maybe there is already a delay in filing the appeal. Generally what happens is that any applications that are condonation or delay applications that are filed by the department are treated favorably by the judicial authorities, appellate authorities. In such cases, there has to be some embargo, some sort of embargo. If the timeline has already expired and the department has not filed an appeal, in such cases, the department should be some embargo. There are certain considerations. If one chooses to go in for this scheme, there are certain that need to be looked into. The first of all is that it is important to look at the various issues that are involved in a particular appeal. There's a probability of success in these issues. If there is a possibility or probability of success is higher, than one may choose to pursue the appeal. But if the probability of success based on the existing legal position is not very high, one may wish to go in for this settlement. At the same time, the decision is not based only on the probability of success. It is also to be weighed in the cost benefit mode, whether there is going to be because the litigation costs in the income tax cases pursuing the appeals at different levels are very high. It is a prolonged litigation and unnecessary burden at the head of the taxpayer. It is important to see that the cost benefit analysis is also done while deciding whether the appeal is to be decided in the dispute resolution or not. Now there is a timeline set for payment of taxes, and it is been clarified to the government also that unless the taxes are paid under the scheme, this matter will not be over. Therefore, it is very important. There could be certain litigations where the demands are high. So it is important that the funds are arranged in a timely manner to make the process through. Internal coordination will also be necessary because there are some different departments in an organization: the treasury department, the tax department, the litigation department. All of them are involved in this particular process of settling the disputes or doing the litigation. So a very, very cohesive internal coordination is important, and regular tracking and keeping watch on the challans and utility forms that are to be notified. Although the timeline of 31st March has been extended to 30th June, yet it is important because the scheme is time sensitive. It is important that we follow the process. We have taken up a couple of cases here to look at how the scheme will work. The first case is here where the income returned by the taxpayer is, let's say, an amount 2,000, and there are 4 issues involved: 1, 2, 3, 4, where the additions have been made by the tax officer. What is the outcome of the Commissioner Income Tax Appeals is that the first issue has been decided in favor by the Commissioner Income Tax Appeal. Issue number 2, 3, 4, these have not been challenged by the taxpayer at all. in the tribunal. The additions were sustained by Commissioner Appeals. In this kind of a scenario, what will happen is the taxpayer will have an option to settle only dispute which is pending, which was challenged before the tribunal. The issues number 2, 3, and 4, which were not challenged before the tribunal, will not be eligible for the scheme. Now, issue 1, which has been decided by the Commissioner of Income Tax appeal in favor of the taxpayer, in this case, the taxpayer will have to pay only 50% of the disputed tax. He will not have to pay the entire amount. Now, because issue number 2, 3, and 4 have not been challenged by the taxpayer in tribunal, in this case, neither these issues can be settled in Vivad Se Vishwas Scheme, nor the penalty proceedings and other consequences in terms of interest and other things can be settled. So, it is only the issue number 1 which can be settled under the scheme. The second situation is where the returned income was 2,000 rupees and the assessing officer made certain additions, 4 different additions, issue number 1, 2, 3, 4. And Commissioner Income Tax Appeal in the first case sustained. In the second case, he enhanced to 600 rupees. Third case, he enhanced 300. Fourth was sustained. The taxpayer was in tribunal, and tribunal has decided the matter and said that the first issue is covered in favor of the taxpayer because of the order in a different assessment years. In the issue 2, the tribunal has reduced the addition than what was confirmed by the Commissioner Income Tax Appeals. From 600, it has come down to 400. In issue number 3, this issue has been sent back to the tax officer for verification. Issue number 4, the entire demand has been deleted. Let's look at all these 4 issues. What will be the computation of disputed tax in this case? Let's look at the first issue, which is covered in favor of the taxpayer. The taxpayer will be liable to pay only 50% of the tax, disputed tax, computable on the addition. On 500, we have taken an assumption of 31.2% tax rate. So this tax will be 78 rupees. Issue number 2, the tribunal has confirmed 400 rupees. So the disputed tax will be computed at the rate of 100%. On this 400, that means 125 rupees. Issue number 3 has been sent back for verification. As per the circular, it will be assumed that verification will be done the way it was before the Commissioner Appeals. So in issue number 3, 100% of tax will have to be paid on 300 rupees. On issue number 4, because this has been deleted and the department might file an appeal before the High Court, in this case, the taxpayer will have to pay only 50% of the tax. That brings us to the closure of this presentation. We'll be happy to take any questions if there are.
Thank you for the presentation, Neeraj. We now invite all of our participants to type your questions in the chat box in the webinar panel on the bottom right of your screen, and we will definitely have Neeraj answer some of them.
There is this question that supposing there is no amount payable, still can a taxpayer avail the scheme? Well, the answer is yes. Even if there is no amount payable, can one settle the dispute under the scheme? The answer is yes. There could be situations whereby the taxpayer had returned loss in his tax return, and then loss was reduced. In such cases, there is a possibility of no demand at all. Yet, because there are two options available to the taxpayer, either to pay the tax on the disputed tax amount or to carry forward the reduced loss, he can settle the uh, dispute under Vivad Se Vishwas Scheme. There is this question relating to whether the APA cases, APA applications, they can be settled under Vivad Se Vishwas Scheme or not, and what is going to be specially about the rollback period. Well, this is not clear right now as on the date, but definitely the representations have been made before the government, and I'm sure they will be covering this particular issue in second circular that is expected very shortly. One more question. This is in case the appeal is remanded back to the assessing officer, can the SSC avail benefit of VSB scheme? However, the order for remaining is not available. Yes, see, the remand order availability is a prerequisite, because unless the order is there, we do not know whether the the matter has been remanded back to the assessing officer. I am assuming that there is a remand order available. In that case, one can opt for the scheme. It will be assumed that the assessment will be framed in the same manner as was done previously by the assessing officer. Jugal, we can spend another 2-3 minutes if we have some more questions.
Sure. We're just waiting for a couple of them to come in. We'll be
There is one question coming: how many cases will get settled of 4,83,000 cases? I'm not really sure how many cases will get settled. It will depend on the wish of the taxpayers and what are the chances of winning, losing. As I said, the taxpayers will have to do a cost benefit analysis also, chances of success, whether they want to carry on the litigation or they want peace of mind. It is a combination of all of those things. But yes, the cases where the chances of success are low or people want to get over the difficulties, they will definitely opt for this. The intention of the government is to settle all the disputes, to bring the litigation to zero level.
Okay, that's all the questions that we have for now, Neeraj.
Okay.
Thank you very much.
Okay. So the announcement that was made by the Honorable Finance Minister a couple of hours ago was indeed very, very welcome because it gives a lot of respite to the taxpayers, and I would say the entire country has taken together because the timeline has been extended to 30th June. The taxpayers were actually struggling to make the arrangement of funds and making the payment of taxes because people are eager to avail the scheme. And this definitely is a very, very welcome step from the government side. So thank you, everyone. Thank you for joining us this evening. We'll be happy to take any other questions. You can mail those questions to us. We will also see how soon can we circulate this presentation to all of you. Thank you very much. Feel free to come back to us for any questions that you have.
Thank you, Neeraj.